Welcome to our weekly shipping report. VLCC rates soften but remain at historically high levels. The dirty tanker market continues to trade at substantially higher year-over-year levels, with the Baltic Dirty Tanker Index currently around 90% above the same period last year. This underscores that, in aggregate, freight rates across dirty tanker routes remain well above historical norms, despite recent short-term adjustments in spot markets. Toward the end of January, market indicators point to softer momentum in VLCC spot rates, reflected in negative week-over-week movements on key benchmark routes. Notwithstanding this near-term softening, medium-term performance remains strong on a route-specific basis. On a month-over-month basis, both the Middle East Gulf to China and West Africa to China routes posted gains of roughly 60%. Longer-dated comparisons remain particularly pronounced. The Baltic Dirty Tanker Index continues to reflect these accumulated gains and has yet to materially adjust to the most recent weekly easing in VLCC spot rates. Looking ahead, market participants remain focused on macroeconomic and geopolitical factors that could shape near-term dirty freight dynamics. Uncertainty surrounding global oil prices, evolving sanctions regimes affecting Russian crude flows, and increased scrutiny of Iranian supply have influenced crude sourcing patterns. Recent indications that Indian refiners have increased procurement from Middle Eastern suppliers point to a potential reorientation of trade flows that may support VLCC utilization. However, such shifts are not inherently ton-mile positive and could act as a moderating influence on freight momentum, depending on displacement effects. Against a backdrop of fluctuating oil demand and supply expectations, these factors add uncertainty to the trajectory of the current market adjustment. Thank you for watching. You can read the full report in our website, www.breakwaveadvisors.com. See you next week.